Hello, everyone. Welcome to our today's session. And today we want us to revise management accounting in ACCA, management accounting in ACCA. And I would want us to look at the specimen question, right? And in this short video, I'm going to do 3 questions only. And here I share my screen. Now, if you look at this question number 1, question number 1, what are they telling us? So question number 1, a manufacturing company benchmarks. To benchmark is to compare. So a manufacturing company benchmarks the performance of its accounts receivable department with that of a leading credit company. So remember, the two companies are not competitors. So this cannot be comparative benchmarking. So comparative benchmarking is out. Internal benchmarking is out because you can see we are comparing 2 departments which are in 2 different companies. So it's not an internal comparison of departments really. Now listen to me very carefully. Which type of benchmarking is the company using? Of course, this has to be functional benchmarking. This has to be functional benchmarking whenever you're comparing 2 different companies which are in 2 different industries, and you happen to be comparing their department functions, then that automatically becomes what here? A functional benchmarking. Great. So we go to number 2. So number 2, which of the following best describes target costing? If you recall, a target cost, if you recall here, a target cost equals who? A target cost equals selling price minus, in this case, the desired profit margin. Remember, under target costing, the basic steps. The first thing you do, if you want to produce shares, what do? You'll go to your competitors to be in future, right? Check how much are they selling these shares at. So in short, you'll be able to come up with what we call a competitive selling price. You'll be able to come up with what we call a competitive selling price. And once you have this competitive selling price, then you'll be able to subtract a profit margin. You'll be able to subtract a profit margin. If I share my screen there very fast, we are told here, which of the following best describes target costing? It is setting a cost by subtracting a desired profit margin from a competitive market. This is the correct answer. The others, like setting a cost for the use in casino variance, no. Setting a selling price for the company, no. Setting a price by adding a, no. So the first one here is the correct one. Great, and you can see now we are correct here. ACCA marks for you, like that. Now we go to the next question. Now, before the next question, yes, go to the next question. So we are told here, information relating to 2 processes F and G was as follows. So we have process F and process G. So we have normal loss as a percentage of input, and then we have input liters, output liters. So we shall start with F. And this is how I'm doing it. I'll do a T account for F before you change screen. For F, I'll do a T account. So in this T account, input, yes. For F, so for F, what do we have? We have the input quantity. Input is always debited. So the input quantity for F is 65,000, right? And then the output, what flows out of the process, we shall take it to the credit side. So the output here is 58,900. So the output is 58,900. And then they have given us normal loss percentage. So the normal loss percentage, if you look at that question very well, it's 8%. And remember, this will be 8% of the input. 8% of 65,000. 8% of 65,000. 8% of 65,000. 8% of 65,000. 8% normal loss is normally pegged on the input. So it will be 0.08 times 65,000, which gives me 5,200. Which gives me 5,200. So please come and add and show us which side is bigger. So this plus this. So plus 58,900 plus 58,900. So this gives us 64. So this side is bigger. So 65,000, 65,000, and then the balancing figure now comes on this side. So it will automatically be what we call abnormal. If it's the loss is on this side, if this balancing figure is on this side, it will become an abnormal loss. An abnormal loss, if you subtract this from 65,000, you will get an abnormal loss of what here? 900. And that is it. So we go to the next product. So please mark this abnormal loss 900. That is F. So F, we have an abnormal loss of 900. So back to the question. Go back to the question. So we have another product. We have another product. This product here is called G. So G, I'll be able to do its T account. So product G. So product G, I can see the input I'm debiting here is 37,500. The input is 37,500. And then the output here is 35,700. 35, and then they have given us a normal loss. Normal loss has been given. Normal loss has been given as what percentage? 5%. Yes. So it is 5%. It's 5%. 5% of the input, which is 37,500. So 37. So we have here 37,500 times 0.05, which will end up giving me 1875. So once I have this 1875, I'll come and add. So 1875 plus this 35 plus this 35,700. When I add like that, I'm getting 37,575. So it's bigger than this. So 37,575. So the bigger one must always be the one that comes there to be. So minus 37,500, which gives us 75. So when this abnormality is on the debit, it becomes what we call an abnormal gain. It becomes an abnormal gain. So basically, F is an abnormal loss of 900. G is an abnormal gain of 75. It's an abnormal gain of 75. Abnormal gain of 75. So go back to the question. Go back to the question. Go back to the question. Great. So in this particular case, the correct answer, they want us for each process, was there an abnormal loss or an abnormal gain? So for F, we have an abnormal loss. Tick that. And then for G, we have an abnormal gain of 75. So once you do that, ACCA is able to give you a correct, ladies and gentlemen, I hope the class has been exciting. We are an RCM online college based in this great country called Kenya, right? But being a virtual training institution, of course, our classes transcend boundaries. That is why you are able to watch me even from the UK, right? From the US, right? And what we have are great virtual classes, very interactive virtual classes where basically you'll be able to get this kind of a video. Once you get the video and of course notes. So once in this case here, you are able to watch the video, read the notes there, we have a WhatsApp group. So this WhatsApp group, we shall be able to interact there. How much are we charging? We are charging $150 per paper. $150 per paper. And this is our number. For those of you who are in Kenya, our number is 0719-525,000. For those of you who are outside, of course, you must replace this 0 with plus 254, right? 719-525,000. We teach all papers of ACCA. Thank you very much. Reach out to us through WhatsApp.